I think the markets realize that it's math. If cases go up 2% a day, then we're always going to have a record number of cases. I think that's what people I talk to when I say why the market's going up, the cases are going up. They say because percentages dictate the numbers get bigger. Is that why we're seeing a disconnect between stocks and sort of the medical headlines, or is it more just about the Fed and the amount of money that's coming into the equity markets?
I think it has to do more with the Fed than anything else. And they have, and the confidence in the Fed. It's kind of interesting because their balance sheet last week actually dipped slightly. So there's no question that they've kind of tapered back a little bit on how much they've injected. That doesn't mean to say that they're, going to be a major taper going on. But we have the situation now where people are trying to figure out what's going to happen next. Can we rally back and take out the June highs in the S&P up just above 3,200, around 32, or does it roll back over because of concerns over the coronavirus and a second wave? The head of the Centers for Disease Control talking about how every pandemic in history has had a second wave, so why wouldn't we have one now? Although he's saying now that he's worried that it's going to be a forest fire, then we'll just have one big wave. Either way, I guess my point is I'm going to just let the market decide or tell me what's going to happen next, because if it does move higher, it's going to be because of the Fed liquidity, because there's no, at least everything that I'm looking at in terms of economic data is telling us that we're not going to get back to what we saw in pre-pandemic levels anytime soon.
No, certainly not. And again, not to go, neither of us as doctors, but remember, Johns Hopkins and a number of experts at the beginning of this, like this is our fourth pandemic, by the way, in the last 101 years, has said that absent a vaccine, 70% of the country or the world may have to get this. Angela Merkel said the exact same thing, I think back in early March, in order to just kind of have it run its course. We are going to have the number of cases rise for the next couple of weeks and months. I think that we know that just based on the current trends. How is the market, though, able to seemingly ignore the medical headlines, at least right now? Is it all about whether or not they're severe enough to cause a re-lockdown, if you will, like the Apple stores that have been re-shut down on Friday or Saturday, I believe it was?
Well, it's going to depend on, again, on investor confidence and on these issues that you're talking about. And, because we're not going to get another mandated lockdown. It's just too devastating to the economy. But what is going to happen? Are companies, individual companies, going to lock down? Are people going to lock themselves down and social distance even more, or just stay at home more? The chances of that I think, are growing. Again, as investors become more confident that the economy is going to get better, I guess my biggest concern right now is that everybody's saying, well, the rate of change is good. That's fine that we're getting month-over-month data that's better than expected. But the year-over-year data still stinks. The market is still expensive. So if we're going to go higher, it's going to be solely on Fed liquidity, and that can't last forever.
At 21 times forward earnings, the market's overvalued.
No question. And you look at GAAP earnings, it's over 30 times, over 34 times earnings. So that doesn't mean the market can't go higher over the near term. Valuations are a horrible timing tool, but people are going to have to be very, very nimble, because what's fueling the market higher here is not the underlying economy. So you can't just sit back and let your investments sit there like you did in 2019.